Don't be relieved by the Federal Reserve's temporary pause in raising interest rates. Its misbegotten attempts to slow the economy still pose a dangerous threat of recession. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. Financial markets have long anticipated the Federal Reserve would temporarily halt raising interest rates, as various measures of inflation are down by almost half of what they were a year ago. Unfortunately, however, our central bank remains in the thrall of its wrong-headed notion that the only way to fight inflation is by hurting the economy and putting more people out of work. That means the Fed could squeeze again if progress for its goal of 2% inflation doesn't appear to be achieved quickly enough. It shows little appetite for easing up its squeeze on the economy anytime soon. Normal commercial activity has never caused inflation, however. Only undermining the value of a currency, in this case the dollar, does that. The other cause of higher prices, events like bad weather, a major war, or the lockdowns precipitated by the COVID-19 pandemic, are best dealt with by letting the economy heal itself. The central bank can't undo bottlenecks or regulations raising the cost of doing business so beloved by the administration by jacking up the price of borrowing money. Fed head Jerome Powell almost a year ago explicitly iterated his belief that only hobbling the economy can cure inflation. He said the central bank made a mistake during the terrible inflation of the 1970s and early 1980s by easing up too soon on hurting the economy. The real reason the recessions of the 1970s didn't slay the inflationary dragon was not that the downturns weren't hard enough. The 1973-1974 slump was brutal, as unemployment reached levels not seen since the depression-ridden years of the 1930s. The problem was that after a recession, our central bank went to undermining the value of the dollar again. Contrary to what Powell and most economists think, it was not even the harsher downturn of 1981 and 82 that finally broke the back of inflation. The key was what was done afterwards. The Fed finally brought about a somewhat stable value of the dollar. This, combined with major tax cuts and deregulation, set off a magnificent economic expansion that, with one brief downturn, lasted the rest of the century. Alas, those policies of dollar stability and pro-growth tax reductions and the absence of stultifying regulations are utterly absent today. At the prodding of regulators, banks are tightening up on lending. The White House and anti-business government agencies like the FTC, the SEC, and others have gone berserk in imposing suffocating rules and decrees. This insanity is exemplified by the Biden administration's war against modern conveniences like gas stoves, dishwashers, air conditioners, and of course the internal combustion engine. Not to mention its ideological war against fossil fuels and the blockages of business mergers. So don't get excited by this pause. Unnecessary hard times are still ahead. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. I look forward to being with you soon again.